Hey, everybody. Coach Simone Kelly here with Own Your Power Radio and Own Your Power TV. And we have our new segment brought to you by Brenda Cano, broker in California. Welcome, Brenda.
Hi, Simone. Great to be here.
Welcome back. We're so excited to have you again. And today's topic is 6 things to know before you buy. So let's get into it. So give us bullet point number 1. What is like some of the things we need to know?
Number 1, before we go out there and find your dream home, the first thing is get approved. Make sure how much your payment is. What is it that you're looking for down payment wise? Because the last thing you want to do is find your dream home and find out that you can't buy it because this step was missed. So that's number 1, get pre-approved. You can do that at a credit union, at a bank, or directly with a loan officer.
I believe that people even go looking without being pre-approved. People really do that? I thought that was like mandatory.
That's usually that's how it starts. You see a home that goes up for sale, you go check it out, you fall in love, and now you're like, I want to buy it, but how?
Right.
So you know you're going to be looking. The best thing to do is get pre-approved. At least you have an idea of what it's going to look like and how to best be prepared.
Okay. What's the second point?
Find out how much you're comfortable with paying, because you might be approved for, let's say, a $2,000-$3,000 payment, but you might not want to spend that much every month.
Right.
So that's the most important thing, because what you want to buy a home, and buying a home it's very important. It's a wonderful thing to have, but you also don't want to change your lifestyle.
Right.
You don't want to just have the home payment and that's it.
Right.
So that's another thing. So, because when you get qualified for a home mortgage, they go based on your pre-tax dollars. So yes, so after taxes, we don't get the same paycheck.
Right.
So you want to just make sure that you're comfortable with the payment, and that's like to me, that's more important than anything, because it is going to be a long-term commitment. You're looking at a 15 or 30-year fixed term loan. So you want to make sure you're comfortable.
The other thing to keep in mind too is when you have a home, you might have a lawn, you might have a pool, you have all these extra expenses. Maybe if the plumbing goes bad, like you got to be ready for that too. So that's another thing a lot of people don't.
The maintenance. Yeah, whenever you pay a home, it's really good to get a home warranty, because that'll help you with any unexpected things that may pop up. And they're usually good for a year and they're renewable. So that's something you can do to try to offset those expenses.
Okay, wonderful. All right, give us bullet point number 3.
Think about your long-term goals, because maybe you just got married or started a family, so you need a specific type of home. Maybe you need a 3-bedroom now, but in the future that might change. So think about what kind of mortgage you want based on how you expect things to turn out. So for example, if you're buying a 2-bedroom home because you're just thinking about having a starter home, but you know in the future you're going to need 3 or 4 bedrooms because you're planning on making some family changes. If something like that happens, you don't really need to get a 30-year loan. Right. You can actually get a 10-year or 5-year, which are a lot less expensive than the 30-year term.
Okay.
So you'll save on interest, but you already know that after that term expires, you have to either refinance or sell the property, because then it turns into a variable, and that might go up or down depending on the economy.
Exactly. Yeah. Okay. And what's the 4th point?
Make sure you understand the terms of your loan. Like, does it come with a prepayment penalty? Is there any specific terms on that? So most mortgages require you to have home insurance and to pay for your property taxes, either through escrow or on your own. Now, aside from that, they don't really require anything else. But a lot of these mortgages, depending if you go with a 30-year fix or what's called a non-QM, or like an investor, or a different type of loan product that's available right now, they might have a 2 or 3-year prepayment term where you're not allowed to pay off the loan.
Wow. Okay.
That's something you want to make sure.
Hostage.
Okay. Yeah, and so you just want to make sure, like a traditional 30-year, let's say FHA loan, does not have any kind of prepayment penalty, and most conventional 30-year fixed loans don't. But you just want to make sure, because you don't want to, let's say, purchase a home, want to refinance because you went up in value, or because you want to sell it, or anything like that, and now you have a 6-month or 1-year penalty, or you'd have to pay interest for 6 months or up to a year just in order to be able to get out of the loan.
Oh, that's not good.
Yeah. So you just want to make sure what you're signing.
Really educational. This is really, I'm learning a lot. All right, so number 5.
Find out if your loan is assumable. Because maybe in the future, let's say you no longer need the home, or you want to pass it on to a sibling or a relative or something like that, and they could just take over the payments without having to go through the whole thing. They would just assume the loan and you would transfer title. versus having to put the property up on the market to sell it or anything like that. So if it's assumable, it's also usually a lot less expensive to transfer it if you want to keep it within the family.
Gotcha. Okay, I like that. That's good to know. That's if you don't want to rent it, obviously, to the family members. And then what is number 6?
Number 6 would be talk to a mortgage professional. That's kind of the most important thing. And you can talk to there's a lot of retail banks, like let's say the big banks, right? Bank of America, Wells Fargo, that you can go talk to. And there's a lot of smaller mortgage banks. And you can go on Google and find those. And you can actually talk to multiple different loan officers, because not only do they offer rates that vary, they offer different types of programs. So for example, if you're a self-employed person and maybe you don't have all the documents that one of the bigger banks requires, that doesn't mean you can't buy a home. You just have to go under a different program with one of the smaller banks. So they have programs that allow self-employed people to buy homes, which is a lot easier than going through the traditional big banks.
Right.
They also have programs that go based on, let's say, bank statements, just on deposits versus W-2s and tax returns.
Okay.
They also offer lower down payments. Like, let's say you already own a property.
Mm-hmm.
You go to one of the bigger banks and they're wanting 20 or 25% down for a second property. Some of these banks allow you to buy a second property with 10 or 15% down.
Wow.
Yeah.
Here's a question I want to add to that. As an entrepreneur, could you buy the home under your business name? How does that work? Is that possible?
Yeah. It's called the non-qualified mortgage. It's a different type of mortgage, and it's an investor mortgage, because at that point your business would be an investor.
Okay.
And you can buy a property with as low as 10% down under your business.
Okay, that's good to know. Well, Brenda, I think we've done it again. Thank you for so much amazing information. So now how can people reach you if they're interested in learning more?
Well, they can email me or call me.
How can you help people, first of all? Like, what are some of the things you do? Like, if I was to come to you and I say, hey, Brenda, I need to buy a house, what are the steps?
Well, I'm a licensed real estate broker, but I also have a lender's license. So the first thing we would do is get you pre-qualified and go through all of your mortgage options, because as an entrepreneur, as a company owner, you're probably going to want to go with the different type of products that they have,
Okay.
not so much the standard 30-year mortgage.
Okay.
And because they offer lower down payment, less documentation, and also more flexible terms.
Wonderful.
So that would be step number 1. Let's get you pre-approved to find out what's the best program for you and your specific situation. Step number 2 is give me an idea of what is it that you're looking for, and we just go out there and find your dream home.
Okay.
So,
you're based in LA. What if somebody's out of state? Like, how does that work? I know you realtors work with each other somehow.
yeah, we can do that. Or you can just pretty much find your home and we can just help you with the financing, because we're licensed in all 50 states.
Ooh, okay, that's good to know. Wonderful. Well, give us your email so people can reach out to you, Brenda.
So my email is brenda@brendacano.com. So that's BRENDA@BRENDACANO.com.
Wonderful. Well, thanks again for being here, and thanks for being a sponsor of Own Your Power Radio. Have a good day. Remember, everything you want is attainable. Own your power.